Hi, Cody.
Hello. How are you?
Good to see you. I'm
Likewise.
good.
Thanks for having me.
Pleasure to have you here.
Appreciate it.
I would say welcome to Austin, but Austin's home.
Austin is home for the last 3 years.
3 years?
Yeah.
Where were you before?
Prior to that, I was in Spain, and then prior to that, Bogota, and prior to that, San Diego. So
Okay. Roundabout.
roundabout, yeah.
Any favorite good stories, like favorite places?
Bogota's near and dear to my heart. It's the first place we lived abroad, but my son was born in Spain. We spent many years in Spain, so Madrid is where the heart is, I would say.
Yeah.
Today, yeah.
My wife would love to spend some time in Madrid.
Please do. It often gets bypassed. Everyone goes to Barcelona or other cities. Do not leave out Madrid. It's a must.
Where it's on our to visit list.
Excellent.
So our head of content is actually a Pennsylvania guy, but
Okay.
he lives in Madrid and he's been there for years.
Brilliant.
Yeah, and he's just
Good,
loves it.
Good choice. Excellent.
And so what part of Austin is home for
Very
you?
close. Area called Mueller.
Mueller, yeah.
Yeah. So
Okay.
quite 10 minutes from here.
Awesome.
Yeah.
Well, good to meet a fellow Austinite. I don't need to ask you about all the great stuff with Austin, but I will ask you, do you have a favorite food or...
I mean, look, I'm from California originally, so
Okay.
Austin's got great Mexican food. You can't compete with the tacos.
We had some of that at Fintech House today.
Yeah, exactly. Yeah.
Taco Deli, not bad.
For sure.
Good. Well, tell us a little bit about Equabli.
Sure. So myself, co-founders, we founded Equabli about 3.5 years ago, really assuming that and believing that there was going to be another cyclical downturn at some point. And when that happened, banks, and especially in the fintech space, the new kind of online lenders, the off-balance sheet lenders, especially who have never had to deal with the rise in delinquencies or charge-offs, would struggle to find the right solutions to adequately serve their customers and to recoup the amounts in arrears. And so, we've spent the better part of 3 years, 3.5 years building and now selling an end-to-end platform where we bolt on to the loan management system or the banking core. And we essentially unlock the entire collection and recovery value chain. So at that point, depending on where you're at or what your specific use case is, you can do everything from early stage digital collections all the way to late stage debt sale, for example.
Yeah.
More or less.
And
Very sexy.
it's
It's the sexy side of fintech.
is there a particular, tell me about the customer base that you serve.
Any lender for the most part. We're very focused on in the fintech lending space, the mid-size bank, regional bank, but we also participate in a number of large tier 2, tier 1 RFPs at the moment as well.
And are they all consumer or business?
Mostly unsecured consumer debt is where when we built the platform, it's really geared towards that, but we've started to expand into both secured assets and commercial SMB.
Okay, so like auto or...
Yep. Auto is the secured asset. Yeah, we're not doing any mortgage or anything like that at the moment. But I think there's been quite a bit of demand on the SMB side, especially.
So super interesting what Equabli does, and it's solving a problem. Might not sound sexy to you, but I think it's solving such a big need. How did you get started in fintech?
Yeah, so really through Equabli, to be frank. So prior to Equabli, I worked for one of the largest debt buyers in the world. So we would essentially buy the distressed assets off the balance sheet, and we had operations in 17 countries, and we would figure out how to recover off that. And we did it in a quasi tech forward manner, very analytically, and a very consumer centric. And so, my first real dive into fintech was just founding Equabli, and so it's been quite the transition.
Yeah,
from big corp to
kind of learning that.
Yeah,
plus the startup.
For sure.
Yeah,
exactly. Yeah.
How's that been?
It's been good. I mean, there's nothing harder than starting a company. There's nothing more rewarding and exciting and fun than starting a company as well. I think I had a unique decade prior to this where my primary role was to not only acquire, but then transform, optimize, integrate subsidiaries around the world, which is why I lived abroad. And that exposed me to so many different size of companies and levels of maturity from a technology and an analytics perspective and an operations perspective. And so a lot of that's transferable. I think I had hoped it would be a little bit more of a kind of helped me on the starting point, but you can never underestimate what it takes to start something from scratch.
Yeah, starting a new business.
Yeah.
And how did you and your founders meet, and from different backgrounds, I assume?
I spent almost my entire career at my prior company working with and for one of my co-founders, Paul, and when I was first hired in, spent time with Brandon, they were the CEO and the CFO of that company in particular. And then Manu, the other co-founder, and I have worked together throughout my tenure there as well. So we all work together essentially.
Yeah. What was the inspiration behind Equabli? Like what made you want to start?
Yeah, I think the overarching kind of mission is to create a healthier ecosystem by has addressed. I mean, it's a completely underserved sector of consumer finance in particular. And there's been all this innovation on the front end. And yet when a consumer hits a hardship or goes delinquency, you find this is kind of brick wall of, antiquation. It's very archaic beyond that point. So our goal was, like, if we can actually properly address that, if we can improve the customer experience, if we can improve the outcomes both for the customer and the bank, that should improve the balance sheet, the P&L as well, and hopefully that pays forward to in the general credit ecosystem, brings rates down, things like that.
Oh, I love that. So how is it making it a better experience for consumers?
A lot of ways. I think the most fundamental, the foundational way is we're closing a lot of the data gaps. So today there's a enormous lack of transparency. Lenders, there's billions and billions of dollars that's being outsourced or pushed through collections channels, and they have no idea what's actually driving performance or what that customer experience is. It's very hard to apply the right level of compliance oversight for those consumers, and all that results in a bad experience at the end of the day. So when you start to close those gaps, you now have very real, actionable insights. You know exactly what to focus on. You know you have a better sense of what your customers need, when they want to be contacted, what the right options are to get them on the path of financial recovery, et cetera, et cetera. And it's hard to do that in today's archaic structure.
What about on the business side, when you're working with the institutions? Are they seeing improved collections or better customer experience resulting in some kind of payoff schedule? Or
yeah, it's basically three things. The first is there's massive cost savings because of the automation of the platform. And so where without Equabli, you're kind of forced to piecemeal together a lot of technology and teams and outsourcing units, et cetera. Now with Equabli, you can meaningfully consolidate that, and you need less to do more, essentially. And so there's cost savings. The second thing is you see performance improvement. So underpinning all of our technology is a pretty powerful machine learning engine, and that is consistently it's a feedback loop. So it's consistently taking the information from the client, the lender, all the performance activity on the back end from all the customer touch points, et cetera. And it is optimizing the strategies, the time to call, the time, the channel, the vendor, all of these decision points in the recovery strategy. And that improves performance. Hopefully, performance is collections, but hopefully that's also providing the right outcome for the customer. That's the ultimate goal. Yeah. And kind of the underpinning to the word Equabli, it's a kind of a play on being equitable, if you will. So can we find a win-win here?
That I've never heard it put that way, and it should be be equitable. I think one thing that really that frustrates me as a consumer and also as a business person is there is that one. Technically, you're right, there's this wall. Once you're working with an institution and you have some kind of a hardship, sometimes it's self-inflicted, but sometimes just life happens.
Sure.
And then suddenly you're put in over here and you're disconnected from the system, and you have people chasing 100%. You down or whatever ways they're going to collect it. You see it in the car business. It's not user-friendly by any means. So I love what I hear you saying. It sounds like then doing it in an equitable way. In a sense, you're solving such a big problem, and in an elegant way, it sounds like, that is machine learning, so it's actually getting better.
Yep.
And is that improvement through the machine learning being applied across all your clientele, or is it single?
There's some data that cannot be shared across. Yeah, but generally at a meta level across all the clientele.
Interesting. Can you give me an example?
I think one very specific example is legal selection. So litigation post charge off is a very common recovery strategy. It's a very important strategy. When a consumer has ability but no willingness, they're generally at some point you're going to either sell that debt and the debt buyer is going to litigate that, or you're going to litigate it yourself. It's just, there's kind of no way around it. Now, I think two things happen with the Equabli platform. One, if you're going to litigate, you're going to have a much higher level of confidence that you're litigating the right people at the right time versus kind of spraying and praying, if you will. And that's important from a regulatory standpoint. It's important for the customers. It's a very costly channel for the bank. So, it's important. The other thing is, by providing the other tools and by providing the analytics that we do, you can absolutely maximize the other channels prior to litigation and hopefully bring that population down.
Yeah, reduce your litigation.
Yeah, resolve these things without going to the what I would consider that as a terminal strategy, right?
Yeah,
or selling your debt too. I think debt sell is another thing. It's an important channel. Again, I'm really focused on the post recovery side here, or the post charge off side on the recovery strategy. But banks often just pull that lever because it's easy, right? It's the easier. It's kind of seen as the easier channel. It's liquidity now, but you're getting cents on the dollar, and you're foregoing a lot of intrinsic value. There's data for this distressed consumers that you should be able to utilize upstream in your current operations. It might impact the way you're underwriting going forward. And also there's a big population of customers in those debt sales that sell portfolio that are rehabilitable. If you're able to identify that, and if you have the ability to actually service them, it's powerful. You can get them back into the lending ecosystem.
Yeah, it sounds a lot like the credit card turndowns. Like you have this whole pool of people that might be creditworthy at some point, or they've run into a hardship, like you said, and how do you help bring them back through to get them back to health financially without destroying the relationship by sending them into litigating or...
Exactly.
Yeah, I love that.
For sure.
What would you say is some of your biggest challenges right now when you think about where you guys are as a business and where you want to go?
Yeah, I think there's a lot of tailwinds at the moment because unfortunately, when you look in the consumer statistics, consumers are over leveraged in a major way. Their credit card debt's an all-time high, balances are at an all-time high, delinquencies are starting to pop, charge-offs starting to fall through. So that's creating a lot of demand and urgency at the, which is great for the sales pipeline, the sales funnel. I think like any startup, new business, that comes with the challenge of being able to deliver. And so it's just scaling the business at the right pace and velocity with the scale of the growth of the business itself. We're lucky to be kind of well capitalized at the moment. I think one of the bigger challenges is we're answering although it's not, it's a generally kind of unknown in the consumer finance space. We're answering a problem that is now like really front of mind for a lot of folks, not just in the US, but outside. And given kind of my international experience, exposure, and network, I think one big challenge is just there's a lot of opportunity for us to capitalize on. And but if you do that, if you cast that net too wide, it can have the opposite effect, right? On the business and on growth. So just staying disciplined, staying focused, and I'd probably say those are the two big challenges.
That's great. And is there anything that you wish more people knew about Equabli that they don't?
I think hey, like we exist. There's not a lot of innovation in our space, and therefore adoption is relatively slow. That's actually probably the other challenge I would mention.
Adoption.
Just general adoption to completion, because I don't know if we're gluttons for punishment, but selling SaaS into financial services, like those are long sales cycles, those are difficult sales cycles. And even if you have a way to get that decision made, you're then stuck in the procurement process and the onboarding process, these types of things. So that's another challenge. But I think because the industry has just remained relatively archaic for so long, not a lot of folks know that there's new options out there like Equabli. And so there's a lot of marketing that we need to do to show people that we're around, that someone's actually trying to address this part of the consumer life cycle. And we're ready to work with them.
I suspect the story you're getting, the folks that learn about you are raising their hands saying, yeah, that's super interesting. But then from the hand raisers into the pipeline, the velocity of the pipeline to actual integration, adoption, the utilization, like, well,
Yes.
yeah, I get it. Yeah.
And as you know, we love working with the fintech lenders. They generally work a little bit faster. So the technology is a bit more advanced. So it's easier to connect in with our APIs, things like that. As you start to move up in with scaled businesses, though, that velocity just will naturally slow at some point.
Yeah. Couple questions left. One is trust. And I want to kind of frame that for you. Trust is at all-time low, particularly for those of us in the financial industry, and particularly where you're at, when people are having a hard time.
Yes.
And there's not a whole lot of propping up for people that run into circumstances. I mean, sometimes that's self-inflicted and they're not great to work with, and they might, at some level, deserve where they are. But for those people that aren't, and despite that, trust in society is at all-time low too. So when you think about Equabli and what you guys are doing and what we're just doing as a whole, and I see a lot of benefits for what you're doing from a consumer standpoint and a business standpoint, how do you see us in this industry being able to build more trust in the financial system and restore some of the faith that I think people have lost?
It's a great question. It's one that I actually will walk away and chew on for a while. But the thing that pops into my head immediately is transparency. I think there's such a lack of transparency, generally speaking. I mean, look at T's and C's.
Oh yeah.
In general, it's there, but
you sit there and read the eight point font.
Yeah. The two level font, but transparency across the entire kind of process. And so I think the more that we tackle that, that will naturally create a higher level of trust. There's stuff going on right now with late fees and things like that as well, which are obviously having a pretty major impact on the lenders themselves. But I think that will actually probably do well for the trust factor.
Probably build it. Yeah, for sure. I love that transparency. Okay, last question is, you're in a unique spot in the sense that, one, you're a founder, two, you're newer to the space. There's a lot of founders I talk to who've been at it a long time but haven't really done their own thing.
Yeah.
What advice might you give someone that's thinking about coming into the fintech space?
Interesting. I'd say, first and foremost, let me just focus on what I think's gone well for me, and I would say try to replicate this. And there's been plenty of challenges as well, but one thing I'm very lucky to have are great founders, deep relationships. There is trust there, and I can see, I hear time and time again of these horror stories where things just kind of fall apart at the founder level, of people separate. And I can't ever imagine that happening with my founding group. I guess never say never, but we're very lucky to just have history and trust. And I think that's very important, is when you start to take on investments as well, you need to think strategically about those investments. Are they going to, like, what value beyond the check are they going to add? And there's a trust factor there as well with those folks. So again, we've been very lucky with, especially the VCs that we've brought on. All are strategic in nature, all have added much more value than just the check. And it's, I'll go kind of back a bit on this, but I think the other very important thing is you have to be convicted, very convicted about what you're doing, because you're going to be demotivated, you're going to be exhausted, you're going to run into, you will not celebrate a victory for more than 30 seconds until you're bombarded with the next challenge that you have to overcome. And so if you don't have that conviction, you'll never be able to persevere.
Yeah.
You'll run out of steam, and that'll be the end of it.
Man, I love that. So conviction, good relationships, trusted relationships. Yes. I'd say smart money, but that's not really doing it justice. I think strategic partnerships. There's one thing that I've heard today with all of our FinTech House conversations, and it all comes down to relationships and community. Yeah. Like, those are,
for sure,
two human things that I think just it permeates this industry. And at the FinTech House, for those that are listening and seeing us in video, can't see or hear the sounds like 100 people downstairs.
Yeah, it's very loud. Yeah.
Yeah. In the community aspects of the fintech industry is, to me, it's really, really soul filling to know that these people, folks like you and others in the industry of all varieties of different skills and backgrounds doing different types of things are all in community to try to make the financial lives of the businesses and the consumers they serve better.
Yes.
Through all the challenges and the regulatory and everything, societal things, everything else. So
it is so refreshing. And I've spent my entire career at large banks, or my last role, big, corporation, big debt buyer. And it is so refreshing to actually participate in this, broader ecosystem where they are doing exactly what you said, and the mind share, the relationships that you're able to build in this space is phenomenal. Yeah. It's a huge, after 24 years in consumer finance, suddenly there's, I'm reinvigorated.
Yeah, that's great.
This. Yeah, that's great.
Well, man, I love what you're doing at Equabli. Thanks so much. Super fun talking to you. Now, I know you're in Austin. We got to get together.
Yeah, I'd love to. Yeah,
so, be fun. All right, thank you so much.
Yeah, you got it. Thank you.
Thank you for listening to this episode. If you've enjoyed what you've heard, don't forget to hit subscribe. And if you'd like to learn more about Customer and the work we're doing building financial and fintech brands and businesses, please visit our website, customer.com. That's CSTMR.com. Or you can find us interacting with clients and sharing insights on LinkedIn. All of these links will be in the show notes.